Mr. Mathur, thank you so much for taking your time out and speaking with us. We will talk about crude oil and base metals in just a bit, but first up, let's start with precious metal market because this continues to shine. We've seen a solid run up on a year-to-date basis, but do you believe this is sustainable going forward as well?
Thank you very much, Ashisha, and inviting us on the ET Now show. Welcome to all the viewers. Been a very topsy-turvy week or the last few months for the bullion space. We did saw all-time highs a few months earlier for bullion. Particularly gold touched an all-time high of around 2,800 plus dollars, and even on the silver, we saw a lakh rupee crossing for the Indian markets at the MCX, even on the spot market. So I think the trend has been very positive on account of couple of I would say fundamental factors which were predominant few months back. The growth perspective from the central bank's purview was taking one step further because the inflationary concerns have now been anchored by the global markets, I would say the governments across the world. And with crude stabilizing at around $75-$70 levels, it was anticipated that we won't see much of an inflationary concerns coming up. So the growth took the charge. The central banks were looking forward to cut the rates, which they had increased in anticipation of the inflationary concerns arising out of the geopolitical tension. So one was that particular inflationary concerns, which made the dollar more appreciative against the other currencies. But at the same time, when the concerns were there for the growth and the anticipation or the expectation was that the Federal Reserve would go aggressive in terms of the rate cutting, the Fed rate cut, I would say that was now started discounting in, and we saw the dollar index from the highs of 107, 108 touching to around 103 levels too. And with that, the central bank buying, the geopolitical tensions, all those things created the positive, I would say, factors for bullion and particularly gold as a safe haven demand. Come to the current scenario. Now, inflationary concerns are done with. We are seeing dollar appreciative. The economic data which is coming out of the US is quite positive. Central banks have started now maintaining, I would say, a dovish stance. So therefore, I would say that be it the rate cut or not, but then the central banks would continue to be on the side of making the neutral stance with respect to the growth and inflation. And with that, the dollar index have started, I would say, appreciating against the other currencies. So the dollar index on the upside, therefore, inverse correlation to the dollar denominated commodities, Desha, and therefore the prices are tumbling down. There are also fundamental other reasons. There are some kind of ease of, I would say, an understanding that the conflicts with Russia and Ukraine would take some shape in due course of time. It's already been almost 2.5 years. 3 years would be in February 2025 when this invasion of Russia started off on the Ukraine. So all those trends actually have kind of an, I would say, soothing effect on the dollar index per se, and at the same time the geopolitical risks too, I would say, would be muted in months to come. So all these factors, the risk averse factors, would be kind of little diluted, and therefore the decline in terms of the bullion as a safe haven demand. Currently around $2,670 levels. Indian markets, if we talk about on the MCX, we are currently at around 600 levels, down around 1% today, 1,035 per 10 grams today. And even the silver too is down by around 1,500 rupees, down by around 1.6% on the MCX. So I think the trend would be on the downside for both gold and silver, based upon the concerns, the easing
Hmm.
concerns with respect to the geopolitical scenario, and at the same time, the Federal Reserve cutting down on their interest rates.
Understood. So you're saying the trend could be on the downside, but for the next 1 year, if you can give us a ballpark range of where gold and silver prices are headed, both on MCX as well as in the global market?
I would say that we did saw 2,800 plus, Adisha, as I said earlier, the all-time high for the gold. The silver didn't touch an all-time high in dollar terms. The all-time high the silver prices touched was around 39, $40 sometime in 2011, 2012. But then Indian markets, we did touch a lakh or so. Overall, I would say that the gold would not be giving the same kind of returns the way we have seen over the last, I would say, 1 or 2 years. 2,670 is what the current prices are. They're hovering around that particular level. So I would say around 2,700 to 2,600 on the downside, and maybe 2,550 on the downside we can see for gold. As far as the silver is concerned, on the Indian markets, we did saw silver prices again moving down. We are closing at around, just hold on for a second, I'll give you the live current rate itself. So the silver is around 89 to 80 or so. I would say that the overall trend for silver is downside in the short term, but being an industrial metal and the growth concerns now being spread out, I would say that the industrial metal demand might take silver to the next highs of around 1,10,000 to 1,15,000 per kg in Indian markets. As far as the gold is concerned, 76,600, as I said earlier, for 10 grams. I would say that the prices would hover around these levels. The downside is 75, 74,000 levels. And on the upside, we may see around 80,000 levels. But don't expect the continuing returns which we have seen over the last few years, at least the last 2 years for bullion.
So we should not expect the kind of returns that we have seen on gold and silver over the last few years and that they could sustain going forward. But Mr. Mathur, as a diversification method, if I want to allocate a percentage of my portfolio to precious metals, how much would that be?
Adesh, a very right question. Maybe people don't understand it when the other asset classes are doing well. I would always recommend means you should never look, and I'm repeating it again. If you're looking forward for portfolio diversification, you should never look the return perspective on bullion. Means there have been recent times, be it COVID, be it the Russia-Ukraine, the geopolitics in Middle East, all those things we have seen that the gold act as a diversifier to the portfolio and diversifier to the risk assets, being a risk averse asset. Now, therefore, you should never look out for the return perspective on bullion, and particularly gold as a portfolio part of it. When the risk assets, the equity markets are not doing well, that's the time when the gold starts performing. And all those reasons which we have seen in the last 2 or 3 years have given people a kind of an understanding that having 12 to 15% of your portfolio in gold is always a good thing to look forward to. It gives a better risk adjusted returns too, Adisha. So therefore means just keep investing, means you should look forward in a staggered way like an SIP for building up your portfolio against the risks on the equity side, Adesha, always. So there are a couple of options now. Means we didn't have too many options few years earlier. You have the ETFs, you have the physical, you have the sovereign gold bonds. All those things are available now for an investor to diversify the portfolio into bullion. And particularly in India, you even have silver ETFs now, which were not there few years earlier. So there are a lot many options for people to be invested in gold for a portfolio diversification perspective and not just for the return perspective. Adesha, to you.
Absolutely. So you should not look at returns when you're investing in precious metals as a diversifier. But Mr. Mathur, also let's shift focus and let's talk about crude oil and base metals. China continues to weigh heavy. China is the biggest importer of crude oil and is also the biggest producer and consumer of most other industrial metals. Stimulus measures from China were not as high as expected and it didn't really move the needle as such. How do you see this China factor moving and its impact on both base metals as well as crude oil?
I think China is or has been the driver for both the industrial metals, the base metals, so to say, and the journey on the crude oil. Means I think the Brent has been around $75–80, and the WTI Adesha is quoting at around $75–70 levels or so. Now, there has been a weak demand in the last few years because of the economic scenario in China being the major driver or the importer of crude oil. So I would say that that China definitely holds the key with respect to the demand on crude and the industrial metals, but that is not the only factor which will gonna drive either the energy prices or the industrial metal prices. Now, the geopolitics in the Middle East, I would say, would somehow be contained. Means I would say it will not be kind of an aggressive moves. We have already heard about Lebanon and Israel talking about something on the ceasefire early in the morning. And all those things are being touched upon in terms of the benefit which it will provide as a stabilization to the global economy in kind of an uncertainty where we were living in. Now, the Russia-Ukraine factor also somehow it seems like would come to some kind of a conclusion in months to come. All those factors plus the business positive or I would say business friendly policies in the US may take growth as predominant than inflation as of this particular moment. So with that particular perspective on growth, definitely the demand for the industrial metals would surely be taken to the next level. We would also see that the crude, which is kind of, I would say, in a supply oversupply, or the natural gas in an oversupply situation few months earlier, would now be neutral in terms of the inventories. The natural gas perspective, the winters would be a little harsher, as we understand the heating energy days, as they say, the expectation is 5% plus for this winter session. So the energy demand, I would say, both for the crude and the natural gas, would be a little higher than what we have seen in the last couple of months or even the last winter session, I would say winter season in the US and the European Union. So I would say that the prices would surely be looking positive from, say, for example, from the natural gas perspective, but not too great in terms of the crude oil prices, which I would say would stabilize at around 65 on the downside. I'm talking about the WTI as of now, Adesha. 65 or 70 for the Brent on the downside to approximately $80 levels for WTI and Brent. In that particular range, if things move on as we expect today, what we are hearing today would be something to look out for. As far as the copper and other commodities are concerned, we are a little bullish because of the stimulus measures the government has taken in China, and the growth perspective across the developed world would be a positive, I would say, indicator for the demand on the industrial metals too. So a kind of neutral to bullish on base metals and industrial metals, neutral to bearish for crude, but kind of bullishness on natural gas from here.
Understood. So that's the word coming in on commodity market and what's the outlook going forward. Mr. Mathur, thank you so much for taking your time out and speaking with us here on ET Now.
If you like this video, then like, share and subscribe to ET Now.